many ways by which the banks and NBFCs can lend to the sector, especially banks from the point of view of banks. So they can achieve their priority sector guidelines by direct lending, or they can go for assignment of loan. They can do on lending with through an NBFC, or they can go for interbank participation certificates. They can go for priority sector lending certificates. So many ways are there. And now we've also come up with a co-origination model, which is formalized now. It has been there in an informal way over so many years, but now Reserve Bank has thought fit to formalize it. And very interestingly and very appropriately, this came up at this time because then the IL&FS crisis broke out and liquidity became an issue. Pricing of the loans on lending to the banks by the banks to the NBFCs became an issue, and nobody but the best rated NBFCs were getting credit easily. With all these problems compounded, it became very timely that such a thing came, and this would give an impetus to the lending model. So who is allowed to co-originate loans? All banks except RRBs and small finance banks. All scheduled commercial banks are allowed to go for a co-origination of loans, except RRBs and small finance banks, because the major portion of their lending itself is over 75%. 75% is the target for small finance banks and RRBs, regional rural banks. That's why they have been excluded from this, and only the other scheduled commercial banks. So banks can enter into co-origination with NBFCs for loans, MSME, retail, agriculture. These are the main areas where you can enter. There will be a formal agreement between the bank and NBFC. I understand that from the NBFCs I've talked to, that it's a pretty detailed process and an involved process, mainly because banks have their own way of going about credit appraisals, diligence, documentation, so many formalities, and the NBFC has its own ways of doing it. The other one is funding by bank and NBFC is in the ratio, minimum ratio will be 80 to 20, 80 is to 20, where 80 is for the bank and 20% is for the NBFC. The reason for this is that the bank and the NBFC both have their skin in the game. This is risk sharing, you share your risks and your rewards. However, the borrower gets a blended rate of interest, which is proportion wise what the bank and the NBFC would share, so the cost to the borrower becomes much less. Advantages of co-origination: last mile connectivity of customers for both banks and NBFCs. For the banks, there is a reduced operational cost, increase in priority sector lending, thus making it easier to achieve targets, priority sector targets. Banks can bring more people under the ambit of formal lending with wide spectrum of products. And yesterday when I spoke to the NBFC, he said, yes, that is also an opportunity for us. Those who would normally not come to the NBFC route are also coming to us for taking up co-origination. I mean, going for our co-origination products, mainly because the cost of their borrowing has become less. So it is also good for them. Okay, so that's this other part of the story. And there is a better control in terms of servicing, monitoring and recovery, because the NBFC is at the point where their borrowers are, and so they are able to do it in a much better way than banks can. For the NBFCs, what are the advantages? The main advantage is that a funding gap is addressed, and the liquidity constraints which you're facing should come down. It should not come in the way of your going out for lending to all the priority sector areas. And priority sector areas are the areas where most of the lending happens by except for infrastructure or the bigger ones, asset financing, most of the lending happens to the priority sector areas. So when we say priority sector areas, it doesn't mean it's only the smallest of the small lenders, but borrowers, you have a good clientele within your priority sector areas. There is a better turnaround time, as a lower rate of interest as compared with the NBFC for the borrower. These are the advantages for the borrower. In terms of risk appetite, chalking out common lending parameters is a major, challenge or an opportunity, because both the ways of looking at it is different. And due diligence, banks also feel they should go in for their own due diligence, because when a loan goes bad, even though RBI doesn't insist that these people, your NBFC has done the diligence, will the bank just sit back? No, because on inspection, if the loans go bad, then the inspectors point out that the bank has not done its diligence. So the bank does not like to shirk away from the diligence part of it. So there's a little issues like that.